Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Monday, October 10th, 2022. Before we jump into the charts, please click like if you're watching this video right now. Each and every time you watch any YouTube video production we put out from Wicked Stocks, greatly appreciated. Subscribe if you have not. We just cleared the 6,000 mark and growing. Please share these videos with friends and colleagues. Highly appreciated. Let's jump to the charts for Monday. And just a reminder, this is a weekly chart. We had a sell signal really a week ago today. Those production numbers came out on a Sunday afternoon. We gapped clearly below trend-defining midterm support this week at 266.87, anticipating 206.85 as a met objective of sorts. But as you're well aware, I've been sort of holding out as well for 186.70, a return to that channel bottom. I've had that as a 2 to 3 month target. The way things are playing right now, it could be inside of 2 to 3 weeks before reaching 186.70. I think 206.85 is in reach this week. We could bounce nicely off there. I do show that as a 4-star support, meaning it could contain selling on a multi-week basis, not just for the week itself, but perhaps through the balance of October trade. We could double bottom there, and we'll just kind of take it one day at a time at that point. But you know, if we close below 206.85, next stop in pretty quick order within a matter of days, 186.70. And you can see how that actually lines up nicely with a longer-term 5/8 downside Fibonacci off that significant. It doesn't look significant here, but at the time it was probably the most significant downdraft that Tesla had seen since its IPO, and that was the March 2020 COVID low. And that is the low that the only really significant low you can use on this chart going back in time, and it's the one that we're using on all the indexes anyway. So A, B, 5/8 back is 172.77, and you can see how this channel structure is descending to coincide with it by the end of the year. So I'm going to leave it at that, 266.87. I'm not going to leave it at that. I'm going to leave this image at that. 266.87 is our ceiling through October, anticipating at least 206.85, and I think more than likely the 186.70 formation as a 2 to 3 month, possibly week target. So let's jump to the day itself. Actually, I'll show the daily chart here. This is the big picture on the daily chart of what I just showed, having gapped below the mid-260s, anticipating 206.85. And let's take a look at the day. Here we are. 229.95 is that former trend line. We came close to testing, what was that, on Wednesday of last week. We certainly tested it and settled clearly below it on Friday, 229.95. I still will consider this kind of a day resistance area, able to contain daily buying pressures, and below which, within the day, 217.78 in reach, which is a simple trend line off the lows following the 206.85 low from last May. 217.78, I like it. Also because it lines up pretty well with very steeply descending channel structure. Depending on how you construct it, we slipped below the classic formation by a bit, and if you cast the same rate of descent against the slippage factor, it all comes into the upper 210s. 217.78 is the focal point, able to contain session weakness. Don't fall in love with it though. We could actually break it today, and if so, 206.85 not out of the question, although all the minor points I have are carefully chosen, so aggressive day traders can have at 214.50, 209.38, etc., etc. But if we break or open below 217.78, prepare for 206.85 on an intraday basis. Holding above 217.78, we can test 229.95 today. All the minor points here have been carefully chosen as well. 222.02 is the low from Friday. 225.06 I'd like to show you actually, and I'm going to jump back to the top. And that's nothing more. This is a 5-minute bar chart. And so if we open unchanged, if we don't re-challenge Friday's 222.02 low, and we begin trading up, the 225.06 level is a pivot point for the day. I have that as intraday containment. 225.06 able to contain intraday buying, and below which that 217.78 level is expected today, as I showed in the previous slide. But if we push or open today above 225.06, 229.95 is expected. 229.95 is once again this this long-term trend line cast off this series of highs that goes back to May, June of earlier in the year. 229.95. Let's talk upside today, that if we do push or open above 229.95, 238.51 is likely on an intraday basis. And if we settle today back above 229.95, this formation that I'm going to show right here is likely tomorrow. So closing above 229.95, 246.59, this new descending channel top. It's really not new. It's several weeks old now. I have it as a 2-star resistance. So closing above 229.95 tomorrow, we test 246.59, where we could top out actually into later, possibly through the balance of the week, and fall off from there back to new lows within the week. It would be a settlement above 246.59 today, and I don't see that happening. That would signal 2 to 3 day bullish continuation recovery back into the mid 260s, where we find meaningful midterm resistance able to contain buying through the rest of October, and once again below which 206.85 remains a 2 to 3 to 5 week target. And in fact, the 180s expected over the next several months. I mentioned that at the top of this. Now, one thing I will say about 246.59, there is a new descending 1/3 speed line projected off the August high against Friday's low. But I don't want to fall in love with it yet. I don't want to commit to it yet until we see that we've actually put out a good short-term low. So what am I saying here? What I'm saying is if we close above 229.95, it will still be in the 240s. That descending 1/3 speed line is actually at 249.44 today. And so I may wind up switching out, if you will, our resistance for the week. It'll be in the 240s. I just don't know exactly where it'll be. Right now, I'm comfortable with 246.59 as a level that, if settled above today, would spark bullish continuation into the mid 260s. Until then, we can top out at 246.59 and fall back to new lows as we head toward our target, or continue south toward our 206.85 objective, following the settlement a week ago today below the mid 260s long-term support, which I'll remind you once again here. This is the big picture. The 186.70 is considered an objective over the next couple of months. 206.85, though, respected for its ability to contain, if not only weekly, but also monthly selling pressures, perhaps. I think I'm just going to leave it at that. There's really not much else to say for Monday's Tesla report. Be back tomorrow with Tuesdays. Please click like and subscribe, and we will talk soon.